Hello guys, it's Dale here. In this video I'll show you a simple money management technique that will significantly improve your trading. It's not a magic pill, so if you want a magic pill, if you want a holy grail, you best search elsewhere, but this is what I do and what works best for me. Now let me start with a question. What traders do when they have a lot of winning trades in a row, when they are in a winning streak? Yeah, some of them maybe party hard. Not me though. I have 2 kids, so no room for that. But what is pretty common is that traders who are in a winning streak is that they get greedy. You know, the more you get, the more greedy you are. And this is not just about traders, this is basic human psychology. So traders want more and more. It's natural. Traders' thinking could be, for example, like, cool, I made $10,000 in a week, so if I double my positions, it will be $20,000 in a week, right? They are greedy. That's how most people think. And that's exactly the problem, which I want to address in this video, because if they think like this, if you think like this, it will cost you. Trading simply doesn't work like that. Let me demonstrate. So imagine a trader, imagine that this is his equity, slowly rising, and this is a winning streak, right? He's having a lot of winning trades here in this period, so his equity is rising. Now, at this point, he becomes very confident, he becomes greedy, and he's like, okay, I need to increase my risk size, I need to double it, because I want to earn twice as much. The strategy is clearly working, so why not double my risk? What very often happens is that after this winning streak and after doubling the size of their trading positions, there comes a couple of losing trades. And it looks like this, because in this period, the trader was using bigger positions, right? Twice as big positions as usual. So that's why the fall was that steep. Now, what usually comes next is if the trader continues to trade that strategy, he's having some success again. Winning trades. But at this point, the trader became afraid, so he lowered his trading position again to the original size. That's why I'm drawing this rise in the equity, not that steep, because this is a winning streak, but with standard risk, right? And the circle continues. At this point, the trader is like, okay, it's working again, so I can increase my trading position. He becomes greedy again, and what happens? What usually happens is this. Couple of losing trades, because again he was using bigger position, so the fall of the equity was steeper, like in here. So in those 2 places where he was having winning streaks, he was using standard position sizes, but when he took a couple of losing trades, which inevitably come, and usually after a winning streak, trader was using doubled positions. And that's why in the end the trader is not making any money. He's back at where he started. So tell me, is this familiar to you? Maybe it is, because this is a common problem. Now let me demonstrate on something a bit different, on an example of actual trades. So what you see before you is example based on real trades from our members area. Those are the trades from the last 2 weeks. And this is a hypothetical scenario where we have 2 equities, green one and red one. Let's first focus on the green one. The green one is if you risked $120 per trade with take profit $100 per trade. And those are real trades from our members area, all right? So this is based on real trades and real market conditions. Now, the risk-reward ratio in this case is slightly negative. It's not ideal, I know, and I myself prefer positive risk-reward ratio, but let's keep it like this for the sake of this example, all right? So the green line is if you traded all those levels in the past 2 weeks with risk 120 bucks and take profit 100 bucks. In the end, you would make roughly 900 bucks. Now let's focus on the red line. In the last 2 weeks, we had a lot of new incoming members, and this could as well be their experience if they don't have proper money management. So imagine a guy who joined my course 2 weeks ago and he started to trade right here. This is where he joined us. Now, after a couple of days, he was at this point where he took 7 trades, out of which 6 were winners, 1 was loser. At this point, that person could be like, wow, this is working. This is the holy grail I was looking for. What I should do next is I should double my position size. If I do that, I'll be earning twice as much. But after a winning streak, what usually happens is a couple of bad trades. So the timing for doubling your position size at this place is not very good. Now look at the red line. Look at what happened and compare it to the green line. See the dip? That's because that trader, that hypothetical trader, was trading with double position size, right? Now at this point, the trader becomes really discouraged because he's losing money. He's almost 400 bucks down, and maybe he quits right there. That would be the worst case scenario. But let's say that he doesn't quit here, but he's too afraid to use doubled positions, so he goes back to the original size and he continues trading like that until the end, at least until the end of this example. So he made one mistake in here. This is what the mistake took him. In the end, he had 700 bucks, but he could have had 900. He could have had 30% more if he didn't do that mistake. And that 30%, that's just in 2 weeks. So imagine what this does in long term. And imagine if the strike rate in this 2-week period wasn't as good as it was, then the difference would be way bigger. All right? So to sum it up, the problem was increasing position during a winning streak, increasing position in here. And as I was saying, no winning streak lasts forever. And most likely, you'll increase your position right at the end of that winning streak. That's Murphy's Law. It simply happens, right? Because the longer the winning streak, the bigger chance that it will end. And trading will get back to normal, which is not always winning. So, what you want to do is increase position size when you are not in a winning streak. It is as simple as that. When you want to increase your trading positions is in situations where your equity is more or less flat or you are slightly losing. That's the time to think about increasing your risk. All right? Not when you are taking winner after winner. So if you have a time-proven strategy like the one we have in the course that we are trading every day for the last 6 years now, then you want to increase your position size when you are not doing well. All right? Because chances are in your favor that after a worse period, there'll be a good one. Like in here, this was a worse period, and after that, that was a good one. So if you are thinking about increasing your trading positions, it should not be when you are in a winning streak. So this is the bottom line I want you to remember from this video. Don't increase position size during a winning streak, and also don't decrease your position size after a bad day. Now here is a little tool to help you with your position sizes. It is my custom-made trade manager for MT4 platform. It has a lot of useful features, and one of them is also it helps with position size calculation, so you risk the same on all your trades. Let me show you real quick how it looks. So this is it, the trade manager. Right here, you select how much you want to risk. So if I want to keep it at 2%, then this lot size will change based on the stop loss that I use. So let me go limit buy. And right now you can see that it says $200, right? If the stop is like this, it will tell me to risk more, to still risk the $200. See? If I move it like this, then the lot size decreases, but the risk is still 2%. I'm still risking $200. So it's a pretty cool feature to have, and you can download it for free. There's no catch. It's a lifetime license, so you just download it and use it. I'll give you a link below this video where you can get it. You can also get it through my website, which is trader-dale.com. It's not on the homepage, but if you go, for example, to the videos section, scroll down a bit, then it's among the banners here, right? So if you click this, it'll take you to the page with the trade manager, and you can download it in here. All right. So that's about that. And the last tip from this video is take all trades. Let me show you what I mean with this. Let me demonstrate on my last week's trading. So I'll log into the members area and show you all the trades that we had with members in the last week. So this is it. This is the recap from last week. This is stats, which you can access in the members area if you are our member. And those are all the trades that I published and that we traded in the previous week. And I want to divide this table into two parts: Monday, Tuesday, Wednesday, Thursday. So this is one part, and the other part is Friday. Now, if you look in here in this column where it says win-loss, then you can see that from Monday through Thursday, the trading results weren't really good. It was more or less flat. There were 1, 2, 3, 4 losing trades and 3 winning trades. Not too good. So people could think, like, if I wasn't trading those 4 days, it wouldn't really make any difference. I could have had a day off, for example, and that wouldn't be a difference because I didn't make any profit in those 4 days. And the worst case scenario, they would take a Friday off and they would miss the whole show. And in my experience, trading is very often like this. And you can't just pick the good days, unfortunately. So the advice is don't give up, take all the trades, just believe in your strategy and stick to the rules. Right? As you can see, Friday was the day to make your money. Winner after winner. One losing trade. All right? Trading is very often like this. And this is not just my experience. A couple of years ago, I read a book. Unfortunately, I can't really remember who wrote the book, and I also can't remember the name of the book. Sorry about that. If you guys know about the book which I'm going to talk about, shoot me an email, let me know, and I'll let everybody know. But I can't remember how the book was called. Sorry about that. But anyways, the book was about stock trading, and what was super cool about the book was that the guy who wrote it had extensive amounts of historical data. He had like 150 or 200 years of historical data, which is insane. And based on this data, he was saying that on average year, 90% of the gain that stocks made was in 5 or 10 best days throughout the whole year. Right? So 90% of gain was made in 5 to 10 days out of 365. So 5 or 10 days were really significant and the rest simply wasn't. And what I'm showing you here is the same thing, the same experience, only I'm showing you on a smaller sample. But I've been trading for around 13 years now, and this is what I experience as well. So don't give up if you had a couple of boring or not so good days. If you have a battle-tested strategy, like we have with members of my trading course, then just stick to it. and that's how you will get the best results. So yeah, that's about that. That's about the video for today. If you guys liked it and if you would like to join us, then you are welcome to do so. Just go to my website, which is trader-dale.com. Click this button which says Browse Courses, and in here you can join our trading community. This is an elite pack, educational and indicator pack, which focuses on volume profile trading. Below that, there's order flow pack, which focuses on day trading with order flow. If you have any questions, there is a quick chat, so feel free to use it and we will be happy to help. Alright, so that's about that. Thanks for watching, and I'll be looking forward to seeing you next time in some next video, or if you decide to join our members, then I'll see you in the members area. So see you next time, and until then, happy trading.